Welcome to the Confident Dollar Podcast, where we are seeking to bring confidence and organization to your financial life. All right. Welcome back to the Confident Dollar Podcast. My name is Lauren. I'm your host. I started this show a couple years ago to help bring just education to people around finances who want to understand these financial topics without having to jump through all the different jargon and financial speak and try to figure out how that works. So I am the founder and financial advisor at Sailor Portfolios and Planning, a boutique financial planning firm located in Costa Mesa, California, but serving clients across the nation. And started this podcast again, just with the idea of wanting to continue what I do within my daily practice of my firm, but to help bring clarity and organization to people's finances, to help build confidence in your finances so that as you learn, as you understand different aspects of financial topics, that you would have that confidence to make changes in your personal financial life that would give you, make those financial changes over time. So that is the goal with the Confident Dollar podcast. And so try to every week just break down a topic bit by bit, a little piece at a time, to explain something to you that maybe you didn't really quite understand and were maybe too embarrassed to ask somebody, because let's face it, is a lot of these things feel like we should know that, right? I should know at this point what the stock market is. That's what we're talking about today. Like, what is the stock market really? But we feel like, we should know these things as adults when you're older and people are talking about these things and, you're like, okay, clearly everybody else knows what this is. And I haven't really fully grasped that because we're not taught these things in school, which we absolutely should be. So it leads us in this place when we're older and trying to figure it out. And then you kind of feel stuck because you don't really fully understand things. And so you don't really want to take the leap into investing or, even picking stocks in your 401k or whatever it might be, because you're just a little bit nervous about it. So this is the right place for you. We're going to be teaching things, like I said, topic by topic. And today we're talking about what is the stock market actually. So if that's not something you are clear on and you have not learned what that is, or you don't really fully understand, hopefully after today's episode, you have a little better grasp on what the stock market actually is. So let's just start with let's start with the basics. So the stock market is a place where people will buy and sell shares of a company. So maybe that's not basic. Maybe we have to back it up a little bit more. But what companies can do, so you know what companies are, you have Apple and Amazon and you have smaller companies that are just getting started. But in their process of growing, when a company realizes, hey, we might need a little capital, so we need some money to expand or open stores or to do more marketing or, this, that, or the other, as part of their growth of their company, they might realize they need to raise some money in order to grow, right? And early on in a company, you might do that through small business loans, and maybe you have investors from family or friends if you start a company and you're just getting going. But as the company grows, you can do something called an IPO, which is basically, and it's called so IPO stands for initial public offering, and it's a way to raise money for your business. So you are valuing your business, what your business is worth at that time. You are going and saying, hey, we're going to sell this many shares and we're going to release, this IPO is going to release this many shares to the public for ownership. And then you get that money when they buy those shares of your company. So that's called an IPO. And that's what companies will do to become public. So you go from privately owned, where maybe, only a few people own the company or a smaller group of investors own the company, to then publicly owned and publicly traded company, where now the public is able to own shares of that company, and it is publicly traded on different exchanges or in the stock market. So that is where this even starts. So it really comes from the stock market, and having stock in a company comes from the company needing to raise money for their company. That's where this started. And this whole concept, actually, for a little brief history lesson for you, this whole concept actually began, well, it's probably been around even longer, but more the first like recorded, more official concept began in the 17th century when the Dutch East India Company became really the first publicly traded company. They needed to raise money for their company. And so they sold shares of their company. So stock, that's what that is. They sold stock in their company in order to raise money for their company. And then they paid dividends, which is the small income payments that you can get now in certain stocks. They paid dividends to their shareholders. But I mean, this goes back to even further back, where the idea of trading goods, in early civilizations, we can highlight like Belgium became a center for international trade in the 1400s, and merchants would buy goods at a specific price, anticipating that the price would actually rise and they could make a profit. So again, this concept of this have really been around historically for a while, became a little more formal, like I said, with the Dutch East India Company back in the 17th century, and then obviously over time morphed into what it is today, which is a very large platform in which people buy and sell shares of companies. And so you can do that here in the US. Other countries have their own markets. So there's all sorts of different markets across the globe. But it is the same idea that is happening in those markets of people going to that marketplace, that specific marketplace, that stock market, and buying and selling shares of stock. So shares of ownership in a company. So again, which is kind of any option, right? You can go to the stock market and you can purchase shares of Apple and you can own a piece of Apple, right? You're not going to probably own a majority of Apple. That's not going to be something you're going to be able to do, but you can own a piece of Apple. And so as Apple develops and they come out with, new phones or new technology, you benefit from that by owning their shares because of the growth of their shares. So a company can grow over time, which would increase the value of their share, right? So that's where, when it comes to buying and selling the shares of stock, there are, how the market works on the day to day. There's kind of a mix of things that can, affect the share of a company, the cost of that share of the company. So one of them would be what I just kind of highlighted as Apple does well. Let's talk about Apple. If Apple does well and they've released new technology and their numbers on their business look really well, they're projected to grow, then their value of their share might become more valuable, right? That might rise. It might go down if the company's not doing well or they've posted some bad growth over the last couple quarters. Then maybe the supply and demand of that would be maybe people don't really want to own as much Apple shares, and so the stock price goes down. Stock price can also trade on, maybe what's going on in the world, if there's any geopolitical issues, again, company performance, like we talked about. Even just investor emotion of like, hey, I feel really nervous about the economy right now, or I need my money for some reason, then, that would affect the supply and demand of specific stocks and their specific companies, and would either increase or decrease the price of those shares. So the whole point of investing in a company, obviously, is to buy a share at a cheaper price and eventually, after a period of time, sell that share for a higher price and make money. That is what people are trying to do in the stock market. So it is that buying and selling and trading of stocks instead of goods in order to make money over time and build wealth. So that is why people say that investing builds wealth, because you can do this really cool thing by purchasing ownership in certain companies and holding on to that while that company grows or as that company does better, or even like we talked about with the Dutch East India Company, maybe they pay a dividend. A dividend is going to be if a profit, basically, that the company pays out to their shareholders. So certain companies do have a dividend percentage that they have within their shares. Maybe they pay 3% dividend to their shareholders. So they would pay that out, on maybe a quarterly basis to the shareholder. So dividends are another way that you can make money off of owning certain shares. So obviously the stock market can feel overwhelming because you see these pictures of people on this trading floor and, they're trading and it looks panicking and everyone's yelling. And then you can also go to your computer and you can, buy a share of a company. And so obviously over time, as technology has changed, we don't have to be on the floor of a company to be able to buy shares of that company. I'm sorry, the floor of the exchange. You don't have to be on the floor of the exchange in order to be yelling, if someone's trying to sell a share of a company and you're trying to buy it. We no longer have to do that. We can sit from the comfort of our home. We can log in on our account online and we can purchase shares through there. The other thing, like we talked about last week, is through your 401k or your IRA or even your brokerage account, you can buy an individual stock in a company, so what we're talking about, but you can also buy a basket of stocks in funds like an ETF fund or a mutual fund, like we talked about in the last episode. So if you're not familiar with those I would recommend going back to that last episode to hear a little bit more about, mutual funds and ETFs and index funds. But you can buy a whole bunch of companies within those, and you can own a little piece of a bunch of companies, which helps diversify you across different, sectors and different companies. So you don't have all your eggs in one basket of one company and how one company is performing over a period of time. But that is essentially what the stock market is and how the stock market works. A stock is a share of ownership in a company. You can go and buy it. You can turn around and sell it when you want to sell it. The goal is obviously to buy lower and sell higher, which is hard to time. But I will tell you, if you own things over a period of time, the stock market, always goes up over a period of time. Obviously, historically, we don't know what will happen in the long run, but historically, the stock market has always recovered, and the stock market has averaged a positive return over its time of being in existence. So I actually have an ebook on some of this type of information to kind of help break some of these ideas down further. And so if that's something you're interested in, I would have you email me or reach out to me on Instagram or something, and I will get you that ebook. It is free. And it's not cost, but it does go through these stocks and bonds and different funds and, and how all this works and how this can work together for you. What I'm here on on this specific episode, I am not at all recommending stocks for you and purchasing. I am only explaining to you here what a stock is and how the stock market works. I don't want you to think that this is a recommendation to go buy Apple. That is not what this is. That is just for, educational purposes only, to help to explain what the stock market is. So one more thing I did want to explain really quick before we finish up this episode is the different markets that people often refer to. So you have, different exchanges. So you have the New York Stock Exchange. Like I said, you have exchanges in other companies that's where you can specifically go and buy and sell these shares of companies on these exchanges. But you also have something that's always referred to as the market. And you may have heard someone say, oh, the market went up, 3% today, or the market is crashing, or the market. What are people talking about when they're referring to the market? And there have been, I would say, two main markets that are most often referred to. There was one that was more often referred to previously, and that has probably shifted more recently. But you had something called the Dow Jones Industrial, or the Dow, which tracked 30 specific companies on the Dow Jones Industrial. And that is what you will see. So you'll see the Dow that is tracking only 30 companies, how they're performing in every specific day that the market is open. The other one people will refer to oftentimes is the S&P 500. And the S&P 500, that was started back in 1923. Where there was only 90 stocks that the S&P 500 was tracking, but the S&P 500, where the 500 comes from, is now it tracks 500 companies. And it's one of the main indexes of how to see the overall health of the stock market, obviously along with the Dow, but oftentimes people now are really watching the S&P. So those are the two main markets that people mostly watch on the day-to-day. You obviously have others. You have NASDAQ, you have Russell, you have other markets that people are watching, but most often people are referring to those specific, the Dow or the S&P 500, when they're referring to the quote unquote market. So I wanted to explain that to you as well. I don't know if this is helpful. I hope this is a little bit helpful in understanding what the stock market actually is and how it works. But I encourage you to keep listening to different episodes and continue to grow in your education around this type of information to just continue to grow your confidence around your finances. So again, just I hope that's, piece by piece starts to fall into place for you as you try to dig into this and understand about investing and the market and different funds and all of that. So hope you come back and listen another time, and also have a great day. Lauren Gage is a registered representative with and securities offered through LPL Financial, member FINRA SIPC. The opinions voiced in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a decision. Individual tax and legal matters should be discussed with your tax or legal professional. Economic forecasts set forth may not develop as predicted, and there can be no guarantee that strategies promoted will be successful. All performance referenced is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly. There is no assurance that the techniques and strategies discussed are suitable for all investors or will yield positive outcomes. The purchase of certain securities may be required to affect some of the strategies. Investing involves risk, including loss of principal.